So now it is my pleasure to introduce my business partner, Jeff Finkle. He is the creator of ArcView Ventures, which is one of the three entities that we have at ArcView: a FINRA-based broker-dealer, ArcView Consulting, and ArcView Ventures, of which I'm his business partner with that. And Jeff recently answered the call to step up as CEO of the ArcView Group. Okay, so today, Jeff is joined by Matt Hawkins. Matt is the managing partner of Entourage Effect Capital. This is a really fabulous investment firm, and they've made many investments and also many exits. So I welcome to the stage Jeff Finkle, Matt Hawkins.
Where are the s'mores? Well, man, I'll tell you, it's not too hard to feel really good about being in this industry. That was an amazing panel. So Matthew Hawkins. First, should we refer to you as Matt, Matthew, or Hawk?
Well, Matt or Hawk is fine. My mom calls me Matthew when she's trying to get my attention or she's mad at me. So let's stick with Matt or Hawk.
We'll stay away from that. So Hawk, you flew in last weekend during a hurricane to be with us. We got postponed. You went back. And rumor has it that earlier today you were moving in your daughter to her dorm room at Connecticut College. Somehow you showered, you got a flight, and you're back here sitting in the chair. I'll tell you, man, you are in action.
Well, seeing what happened to Chris Webber, I didn't want that to happen to me, and hopefully live is better than doing that. But yes, I got very, very lucky.
All right. So you grew up in Texas, or what I should probably say is the nearly sovereign nation of the state of Texas. That's how Texans think of themselves. You went to UT. You're a Longhorn. Any UT alumni in the crowd? Does anyone know what this means? Hook 'em? Okay. All right.
Obviously not, Jeff.
Obviously not. Let's get a chance to really learn about you and your background. Tell us how your career began and how you got into the cannabis industry.
Well, I've been in private equity my whole career, 25 years. It was a luck and timing moment in 2014. Was in the private lending game and made a few loans with warehouse owners looking to refinance their mortgages out of commercial debt into private debt in Denver, and so they could do that, so they could then lease their facilities to cannabis growers. And it was luck and timing and a premonition that the yields would dry up in real estate and there'd be an opportunity to invest in the equity side of the actual cannabis companies themselves, and that's what we did. We just started raising money for our first fund.
So your first traditional fund, I think it was a 2015 vintage?
It was, yes.
Right? So it was enormously successful. I think you returned about a 3x MOIC. For those of you in the crowd that don't know the term, that means multiple on invested capital. It's one of the ways in which investment managers are measured. And I believe probably 3x was top quartile, so congrats on that. You did Fund 2. It's early, I know, but it's trending that way as well. And now you're raising Fund 3 with a $150 million target. The industry is much different than it was when you raised Fund 1 and 2. So now that you're approaching Fund 3, I know you're well on your way, I know you've done a couple of closes. What is the strategy for this new vehicle?
You're right, the industry's changed dramatically. I mean, Fund 1 was pardon the pun, but a seed venture, venture capital, seed stage, angel investing entity, because that's where the industry was at that point. Fund 2 became more Series A, still early stage. Fund 3 is now later stage companies, and we're able to put an EBITDA or multiple on EBITDA for most of our investments to come up with the proper valuation, which we weren't able to do in the first two funds. So the risk has not only been reduced, but we feel like the upside is even higher because of where we are as an industry. We are about to enter a time where there's going to be some type of federal legalization, whether it's quasi-legalization, whether it's just the Safe Banking Act, who knows. But we're at the precipice of institutional capital entering this game in a big way, which will change the landscape dramatically. And there will no longer be a dearth of capital in the space, which we still have today.
So the stage thesis has changed quite a bit as you've sort of gone up the stack. How about the subsector thesis? Are you still sort of looking at the same kinds of companies, but much further along in their trajectory?
A little bit, yeah. We've been very, by design, we wanted to be investing up and down the value chain to be diversified in order to give our investors, a wide swath of opportunities through our portfolio that touch the plant, ancillary companies, brands, retail, you name it. And now we are just looking for opportunities to build scale in as many sectors as we can in advance of some type of legalization.
Even 2 years ago, 2019, the industry was in some state of distress, right? The public markets, I think it traded down about 90%. We're in the middle of the vape crisis. Capital markets had sort of dried up. There were all kinds of governance breaches among the public operators. That has largely righted itself today. So I know that part of the early thesis for Fund 3 was to play distressed opportunities. I imagine that's changed now as 2019's behind us, 20's behind us, and we're now in sort of this growth phase in 21.
Yeah, I mean, let's face it, COVID was, for the most part, a blessing in disguise for the industry. It sounds terrible to say, but it was. I mean, being an essential business in every state except Massachusetts at the beginning, and then Massachusetts was deemed later, was a big, big win. And I think it really had an impact on a tamping down of the illicit market, just like the vape crisis did. I mean, the vape crisis was proven to be driven by the illicit market, and people didn't want to go buy product on the street corner during COVID. They wanted to go to have curbside pickup at a dispensary or social distancing, or and all the stuff that the cannabis industry was on the forefront of that. So yeah, it changed dramatically, and that's great news for investors because valuations haven't changed that much, believe it or not, which is amazing. And so we have a fantastic investment opportunity at the right time, second only to prohibition in terms of what's waiting for us on the other side. You've got takeouts waiting to happen once big capital comes in. That's not just aggregators like us and then a few others that are sponsors of this event like us.
Yep, no, got it. So look, you and your partners really have had great success as a team. My question is, why have you stood out? What's really responsible for it? Was it your timing? I mean, you were in early. Is it your team? I know a number of members of your team, and they do have some unique skill sets and attributes. But tell us what you think was sort of the primary reason you have been successful.
Well, we're not afraid to get our hands dirty. We all come from private equity backgrounds or operating backgrounds. And so even though our thesis is to back excellent management teams, it doesn't always work. I mean, sometimes, managers need help. They need the guidance of their board members. They need the guidance of their capital partners. They need, in some cases, they need to be, to a point to where management has to be replaced. And we're in this to make our investors money. And so sometimes we have to get our hands really dirty. And that means take over companies or at least put in management that we know can take the company to the next level and actually make money for the founders too. I mean, we don't want to take their equity away, but the best founders of companies are the ones that know that when it's time to be replaced. And that's a hard thing for an entrepreneur to do, but it happens in every business. And we are lucky enough that we just do that. And we get active when we need to, and we've got a track record of success doing that.
Yeah, look, in my experience as an investor on the venture capital side is, the best VCs and PE investors I've seen are the ones like you that are willing to roll up their sleeves, willing to get their hands dirty. best laid plans don't always work out. So that's a big part of it. And I think that is what makes you unique. But so let's talk about the Harborside story, right? Quick timeline for those of you not following it. 2015, EEC, or at the time you were known as Cresco Capital Partners, you invested in a cultivation licensee, which later merged with the retail assets of Harborside. 2017, the company listed on the CSE. The fall of 20, EEC was part of a dissenting shareholder action, which led to a new board slate and you to be elected as chairman. And then last month, you became the interim CEO. So tricky stuff, no doubt. I'm sure there's a great story there. So tell us, Hawk, why is this, a great example of what investors have to do to protect their investments, and in doing so, to protect their LP's capital?
We weren't getting the cooperation from the predecessor board, and so we used the powers that the CSC has in place for us to lead a dissenting shareholder movement, which would have been a proxy fight. Luckily, we didn't have to do that, and we've basically, to this date, since last November, we've done everything we say we're going to do, and I think we're probably a couple of weeks away from making a pretty important announcement on how Harborside's transforming into something really, really special. And we're, even at this stage, we're an incredibly undervalued stock for a $70, $80 million top line business. But we've made no secret about it. We want to be a $300 million company, and we're not far away from making that a reality.
That's great. That's great. I'm sure a lot of that was testament to your good work in guiding the team. All right, so look, my final question. 38 states have now implemented a cannabis program, right? That is 74% of all states, 18 of which, as you know, have adult rec programs. If you look at the history of social initiatives and the pace of social change, whether it's abortion, whether it's gay marriage, whether it's interracial marriage, whether it's the suffrage movement, it's always around the time that 2/3 of states adopt that federal action ensues. So by all intents and purposes, we should be there, notwithstanding who controls the Senate or the Congress and who's in charge of various committees. I'm not going to ask you when you think federal legalization will happen. I'm not as interested in that. I've asked that question a lot. What I'm more interested in an industry that's grown 46% in 2020, whether or not it's critical, whether or not it's essential.
Yeah, I mean, I think it is, but because it's more about, it's important, the social equity is incredibly important, let's face it. But there's also another very, very important component of that, and that is institutional capital being allowed to play in this game. This industry grew the percentage, the 46%, and the CAGR year after year after year is just increasing exponentially. But we can only take it so far with the amount of capital that we have available to us right now. I mean, our third fund we're raising is $150 million. We've raised 50 of it.
It's small.
And it's small, but that's one of the larger funds that have been raised in the industry, ever. And that's ridiculous because this is multiple billions of dollars just in the state of California. I mean, it's a huge industry that needs an infusion of capital, and the only way that can happen is to have something changing at the federal level to where the NASDAQ, New York Stock Exchange can be, we can have companies domiciled there, and the big boys on Wall Street can make investments because we all benefit from that in the end, because every company that's at that $200-300 million level, even less, are going to get attractive valuations applied to them. They're going to get huge influx of capital, and you're going to have incredibly talented management teams come into this space that couldn't do it otherwise because they're public companies they work for now that may get involved, couldn't do it prior to that.
Yeah. So a real catalyst, and that I agree, that's what will happen. Well, look, thank you for spending time with us today. Thank you for making the trip a second time. I hope your daughter's not too upset at you, but probably
she wanted nothing to do with me. We moved her in. I had to take all of her crap 3 flights up of a dorm that doesn't have an elevator, and she's like, "All right, bye."
Yeah, I'm sure she wanted nothing to do with you tonight, so you're in better hands with us.
Right.
Thank you, Matt.
More fun too. Thank you, everybody.